With oil drillers, it only makes sense to drill oil if oil's at a certain price. Is there a price at which Bitcoin no longer makes sense to mine?
So Bitcoin is funny. It's kind of a different. Well, it's a little bit like oil, but oil has its own self-adjusting mechanism. So if you take supply offline, then prices eventually correct, right? And then the most efficient operators can generally always make money. And so Bitcoin is similar. So you have what's called network difficulty, which is the total hash rate of the network. And so the total hash rate of the network, I think, is around 240 exahash right now. And so generally, as prices go down, the least efficient operators will come offline. And so as they come offline, then the difficulty goes down and your equipment earns more. And so your break even goes lower. But where it stands right now, the variable break even is kind of in the $9,000 to $10,000 dollar per Bitcoin range right now on the variable of like running the data centers for our customers. So it's still somewhat profitable, but it's not at a level where someone would go out and buy new hardware by any means. And so it's kind of in that equilibrium, but it usually is self-correcting. So if Bitcoin continues to go down, the most inefficient operators are going to go offline. The more efficient operators make more tokens from their hardware. So it's a little bit self-correcting, but that's kind of the levels. Like 10,000-ish right now, depending on your hardware or your electricity cost, is the variable break even, and 20,000 is kind of the break even to buy new hardware, maybe a little bit above that.